Netflix, take a look at shares today. Slightly under some pressure. That's after UBS downgraded the stock to neutral. The analyst says it's a valuation call. The stock has more than doubled so far this year. All right, we've made it our call of the day. This is the #1 internet analyst, Eric Sheridan from UBS. So he bumps the price target to 425, given the stock's at 412, says it's not quite done yet, but that the long-term growth is already reflected in the stock price.
Anytime an analyst comes out and take stock off a buy list when they've had it on for a long time, made a lot of money.
Been right.
Yes.
All the way all the way up.
Right, as this analyst has. I don't blame them. On the other hand, I don't own the stock. I sold it in the 170s, so I'm not that bright. But the reasons for taking it off, I think, are not ones I would ascribe to. He still sees growth in Europe. Okay, he sees them meeting consensus estimates of subscriber growth in the U.S. I think that's enough to keep the stock going. Today, they just won.
Even given the outperformance, right? And they point out, it's up 35% since the earnings came out in the first quarter, and versus the S&P up 4%. So it's been that dramatic.
Right. And I think he's going to be light on the subscriber growth. And one more point is that they still have a pricing model that is unbelievable, that has lots of elasticity in it. They could raise prices, and in fact, they're looking at a premium plan now, which would increase revenues. As long as they have those levers to pull, you can't get off the bandwagon.
Listen, Eric's been right. He's one of the most thoughtful analysts in the space. He works for my company. He's absolutely terrific. Their income growth is moderating a bit. This has been an incredibly crowded trade, and when you have the axe in the name say it might be time to take a pause, I think you got to pay attention to it at least.
Kevin O'Leary, are you paying attention to this call by the #1 internet analyst?
I am. I have to respect who he is. I did read the note. I thought his content discussion regarding, the concept that studios go cold at some point and that what they generate and produce isn't as hot as it used to be. But that almost seems irrelevant in the context of what Netflix is doing. I own the stock. I see no reason to sell it. He didn't give me a reason to sell it. He actually has a target higher than where it is. But ask yourself this. Right now, as we see these wars going on for content globally between Comcast and Disney and others, they're valuing a new quantum multiple on content, and a brand new price point, a crazy price point we haven't seen before. And here you have it at a time when billions are being spent by Netflix on original Netflix content. It's really, really hard to sell this name in a growth portfolio.
Sure, but he doesn't necessarily. Right. Okay, so he may not give you a reason, as you say, those are your words, to sell it, but at the very least, though, Kevin, he gives us a reason to perhaps rethink the upside at this particular time, given the kind of gains the stock has had.
That's why you have to respect it. But you rethink the down and upside. You rethink managing risk on this name. It's certainly a 5% weighting in a lot of portfolios, including mine, in my growth portfolio. But then I look at it and say to myself, where am I going to redeploy that capital with the metrics that Netflix has? They could raise prices in Europe alone just 2% and increase their cash flow by merely 30. This is a beast to be respected.
Right.
This is a force of nature.
They have proven to have
what they built here,
especially more recently. Sorry, Kevin. This kind of pricing power. Doc, you used to own it. Do you still own it?
No, I don't right now. But the numbers. I mean, I agree with the idea that you've got a big winner. Hats off to your guy. This is a great call. It was a great call up until this point. Now he wants to take some money off the table. So you've been there. And you've been just reading the cards and the dealers getting ready to switch. You figure maybe I back off a little bit. When you looked at his revenue numbers, Judge, he's looking at a little bit of a slowdown between now and 2020. But when you look at where his revenues are in 2022, it's going to go from today's $16 billion to 35 billion. That's crazy good. So if you've got a long-term perspective, I don't think you get out.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.